Be honest for a second. How many times have you caught yourself saying, "If only I could make money while I sleep"? For most people, the dream sounds too far away. They imagine you need to be born rich, have Wall Street-level brains, or be some math genius who can time the stock market like a magician. Truth bomb. None of that is true. You don't need $1 million to start, you don't need insider connections, and you definitely don't need to stare at stock charts all day until your eyes burn. What you need is a plan, patience, and a portfolio built like a well-oiled machine. This video isn't about get-rich-quick nonsense. It's about building a stock portfolio, step by step, that eventually pays your bills with dividend income, capital gains, and compounding wealth, while you sleep, work, travel, or binge-watch your favorite show. Think of it as designing a money machine that doesn't complain, doesn't need vacations, and works 24/7. If you're hungry for success and eager to learn, hit that subscribe button. We're here to share the secrets and strategies to accelerate your journey. Let's break it down, strategy by strategy. Number 1. Start with the end in mind. Define your sleep money number before you invest a single dollar. You need clarity. How much money do you actually want your portfolio to generate each month? Most people never calculate this, which is why they invest randomly and end up frustrated. Say your bills are $2,000 a month. That's your sleep money number. It doesn't matter if someone else needs $10,000 or $500. Your number is yours, and your portfolio should be designed to eventually cover it. Here's where it gets interesting. If you want $2,000 a month and you're aiming for dividend income from blue-chip stocks paying 4% per year, you'd need about $600,000 invested. Sound scary? Hold on. You don't need it all at once. You build it brick by brick. $500 invested monthly over 20-25 years with compounding can get you close to that number. Write your sleep money number on a sticky note. Put it on your desk. Every time you invest, know exactly what you're building toward. Number 2. Build a foundation of safety before chasing growth. Here's where most beginners mess up. They jump straight into risky growth stocks or speculative plays, hoping to strike gold. Then, when volatility hits, they panic, sell, and swear the stock market is a scam. The truth? They built a house without a foundation. If you don't have cash or stable reserves, every time life throws a curveball, a job loss, medical bill, or market dip, you'll be forced to sell investments at the worst possible time, and that destroys the compounding effect. This isn't about avoiding risk altogether. It's about making sure you don't blow up before compounding does its magic. Think of your foundation as the boring but reliable mattress that lets you sleep well while your money works. Number 3. Choose dividend stocks as your core workers. If you want income while you sleep, dividend stocks are your best friends. These are shares of companies that literally pay you cash just for holding them. No extra work, no side hustle grind. You own part of the business and they share profits with you. Now, not all dividend stocks are created equal. A shaky company dangling a 12% yield might collapse tomorrow. Instead, focus on dividend aristocrats, companies that have increased dividends for 25 years. Think consumer staples, utility giants, or healthcare leaders. They survive recessions and keep paying. Here's the math. Invest $10,000 in a 4% yield stock, and you get $400 a year. Doesn't sound like much? Reinvest those dividends, add more each month, and over 15-20 years you'll have a snowball effect where dividends buy more shares, which pay more dividends. Eventually, that $400 can turn into $4,000, then $40,000 a year. Dividend stocks are the employees in your portfolio. They show up every quarter, on time, handing you cash, whether you're awake, asleep, or on a beach. Number 4. Use ETFs to diversify without the headache. Let's face it, picking individual stocks is hard. Even professionals get it wrong half the time. That's where exchange-traded funds come in. They let you buy a basket of stocks in one shot, like owning a slice of the S&P 500 dividend ETFs or international markets. Diversification is protection. If one company tanks, you're not ruined. With ETFs, you spread risk across dozens or hundreds of stocks while still enjoying dividend income and capital appreciation. Take the S&P 500 ETF as an example. Historically, It's returned around 10% annually over the long run. Invest $500 a month, and in 20 years, you could be sitting on nearly $300,000. And that's without picking a single stock yourself. Think of ETFs as your portfolio's autopilot mode. They work in the background, quietly compounding wealth without demanding constant attention. Number 5. Automate your investments like a subscription. Here's the harsh truth. Relying on willpower to invest regularly doesn't work. Life gets in the way. Bills, birthdays, vacations, emergencies. You'll always find excuses not to invest. That's why automation is your secret weapon. Set up automatic transfers into your brokerage account. Schedule buys into ETFs or dividend stocks every month, no matter what the market is doing. This strategy, called dollar cost averaging, smooths out market volatility. You buy more shares when prices are low, fewer when prices are high, and over time your average cost balances out. Automation takes emotions out of investing. No more trying to time the market, no more stress about daily price swings. You treat investing like paying a bill to your future self. And the best part? You can forget about it and still wake up wealthier. Number 6. Reinvest dividends until you hit your target. There's a big temptation when dividends start rolling in. Spend them right away. But that's like eating the seeds instead of planting them. Early on, reinvesting dividends is where the magic of compounding happens. Suppose you earn $1,000 in dividends this year. If you reinvest, that $1,000 buys more dividend-paying shares. Next year, you earn dividends not just from your original shares but also from those new ones. The snowball effect kicks in. Fast forward 15 years, and the same portfolio can be generating thousands more per year than if you had cashed out early. The shift comes when your dividends grow large enough to cover your sleep money number. At that point, you can choose to let dividends hit your bank account instead of being reinvested. That's when your portfolio officially pays your bills while you sleep. Number 7. Avoid the shiny object trap. One of the fastest ways to sabotage your portfolio is chasing fads. A hot IPO, a speculative penny stock, or the next guaranteed 100x crypto will always tempt you. Most of these end badly. Your money machine needs discipline, not gambling. Even if you dedicate 5–10% of your portfolio to speculative plays, keep 90% rock solid in dividend stocks, ETFs, and safe assets. Wealth comes from boring consistency, not adrenaline-fueled bets. Remember this: slow, predictable compounding beats flashy, inconsistent wins. A portfolio that grows quietly year after year will outperform someone who gets lucky once and loses it all the next round. Number 8. Keep fees and taxes from eating your portfolio. This is where many investors unknowingly bleed money. High expense ratios on mutual funds, frequent trading fees, or poor tax planning can silently drain your returns. Always choose low-cost ETFs with expense ratios below 0.2%. Avoid jumping in and out of positions, which triggers short-term capital gains taxes. Think of fees and taxes like termites. You don't see them immediately, but over 20–30 years they can destroy thousands, even hundreds of thousands, of dollars from your portfolio. Protecting your portfolio from these silent killers is as important as picking the right investments. So, commit. Don't look for shortcuts. Don't panic in downturns. And don't underestimate the quiet power of compounding. Your future self will thank you for building a money machine that never sleeps, even when you do. I'm dedicated to helping you achieve financial freedom through right knowledge. If this video resonated with you, like it, share it with your loved ones, and subscribe for more wisdom. Now, if you want to know the 8 sacrifices the top 1% made to become wealthy, then watch this video.